Hello, here we are. I was just telling my class what a wonderful group of people they are and always will be. Hey, this is our last class period, isn't it? We had 41 lectures, right? So is there a class gift that you want to present me at this time? Is there anything like that? Oh, this is awkward. There's nothing? In some countries, they give their instructor a gift at the end of the semester. So I guess I should be teaching in one of those countries. So I'm just kidding. Not really, though. Okay, let's go over the homework. How was the homework?
Fine. Easy.
Okay. All right, let's take a look at that homework, okay? And I just did this myself real quick before class, so check my answers too, okay? All right, let's take a look at this is the direct material, direct labor variance handout. Did anybody get those numbers? Is that agreeing with anybody?
Yep.
Okay. All right. You can see actual hours is 1150. The actual rate is 10. Actual hours, again, is 1150. The standard rate is 950, right? Right there. And the standard hours, how do we get that? It should take 0.2 direct labor hours for every meal that we produce, and we produce 6,000. So 6,000 times 0.2 equals 1,200, right? Are all three of those numbers within the same ballpark? Yes. Okay. All right. Okay, any questions on the air meals? Okay, I think on the next one you had to do direct materials and direct labor. Is that right? Okay. All righty. Let's take a look at the answer to the direct materials. Okay. Those numbers agreeing with what you all got?
Yep.
Anybody? Amen from the congregation? Okay. And remember in the one above, remember to put your unfavorable or favorable, right? Okay. All right. This is a favorable variance. What does that mean? That means that the actual price we got it for was even less than what our standards said to pay, okay? We have an unfavorable quantity variance. What does that mean? Well, that means that the standard quantity that we should have used for the 2,500 bottles of WIM was 18,000 liters. Is that correct? Or 18,000 ounces, excuse me. Okay? We should have used 18,000 ounces for those 2,500 bottles of WIM. We actually used 20,000 ounces. So that's a quantity variance. Is that correct? It's an unfavorable one. Okay? How do we get the 18,000? We're allowed 7.2 ounces for every bottle of WIM. So 7.2 times 2,500 is 18,000. Is that correct? Is that correct? 2,500 times 7.2? Okay. All right. And then let's take a look at the direct labor below it. Okay. Actual hours is 900. The standard rate is 10. The standard hours, we're allowed 0.4 hours for every bottle of WIM that we produced. We produced 2,500. So 0.4 times 2,500 is 1,000. I didn't compute the actual rate. I could have, but they gave me the actual hours times the actual rate, so I just put that in the bubble. This is an unfavorable rate variance, right? Is the number on the right higher? Yes. All right, it's favorable. Some of you used that, didn't you, in your homework? Admit it. Some of you used it. Okay, yeah, that's what I thought. That's what I thought. Okay, so those are the answers. Okay? Those are the answers. Any questions on the homework? That was all I signed November of 23. 23.8. Is that correct?
23.5.
23.5, thank you. Okay, no questions on the handout? Yes, sir.
So all of the numbers are dollar figures representing the costs of the business?
You mean all of these numbers?
Yes.
Yes, there's an understood, good question, understood dollar sign on all these numbers. Okay, I won't draw them all in there, but all the numbers, okay? Except for, of course, this one. This is 900 hours, and this is 900 hours times the standard rate of $10 per hour, but the numbers in the bubbles all have dollars. Good question. Okay? All right, any other questions? All righty, let's take a look at, I believe we went through the October answers because we worked on that in class, did we not? So let's take a look at the November for exercise 23.5, and I think I showed that, the question up on the screen last time, so I won't do that again. But here are the answers for exercise 23.5 for November. Okay, so take a look at that.
I got that song stuck in
Okay. All right, any questions on that? Yeah, Daniel.
I thought they're supposed to be like in the same ballpark. Like, I guess it just doesn't seem like 60,000's in the same ballpark.
You mean, well, the numbers that should be in the same ballpark are these three. And you're right, I mean, that might be in the same ballpark, but that's way, way, way out in right field in the corner, isn't it?
Yeah.
Okay. When I say in the same ballpark, usually what I mean is if this were like $2,700 or $27 million or something. So you're right, that is a mighty unfavorable efficiency variance. And we'll talk about that here in a second. Okay. But yeah, ballpark's kind of a rule of thumb, so. Okay. All right. Any other questions on that one? Anybody? Okay, what I want to do now is we've worked on calculating these. I want to talk about the interpretation of these. What do we do with these things now that we know how to compute them? Okay, and let's take a look at some examples. First of all, let's do this first. Okay, let's talk about direct materials first. Thank you. Okay, direct materials first. I'm not going to put any numbers in here, but this is the price variance, and this is the quantity variance, right? Okay, is that correct? Okay, let's say we have an unfavorable price variance in regards to direct materials. Let's say that we have an unfavorable price variance in regards to direct materials. What does that mean? Put that in layman's terms. What does that mean if we have an unfavorable price variance?
We spent more than we expected.
We spent more than our standards say we should have spent for each unit of raw material. Correct? Very good. We spent more than we should have, than our standards say we should have for each unit of raw material. Okay, let's say that you had an unfavorable price variance. What do you think the title of the person that you would want to talk to first to find out what the deal was?
Procurement.
Who?
Procurement.
Procurement. Okay, it's a big word. And yeah, and what's another term we use for that?
Purchasing.
Purchasing. Good word, Birkinshay. Okay, so you might talk to the purchasing manager, right? Does that make sense? Because you'd want to say, hey, what, and again, I don't want to say that this is who you go blame and yell at, okay? This is who you go talk to and try to figure out the situation. Remember, the whole idea of all of this is management by exception. Try to focus on where the problem really is so you can spend your finite amount of time and resources addressing the real problem, correct? It's just like when you go into a doctor. They want to focus on what is the exact problem, where is it located in your body, and then let's address that problem, right? Okay, so very good. If there's an unfavorable price variance, you'd probably want to talk to the purchasing manager. Okay, What does an unfavorable quantity variance, what does that, put that in layman's term, what does an unfavorable quantity variance in regards to direct materials mean?
It means that we used more than we were expecting to use.
Yes, you used more direct materials for the amount of output than the standards say you should have used. Are you with me? You used more units of direct materials for the amount of output, more than what the standards say you should have used. That is what that is. Now, what would be the title of the person that you would want to talk to in that situation if you had an unfavorable quantity variance?
Like a production manager?
Very good. Like your production manager. Or sometimes we might say your factory supervisor. You know, some title like that. And you would want to say, hey, what is the scoop, right? Why are we using more materials than what our standards say? And again, there might be very, very valid reasons for all of these. We're not blaming anybody, okay? But I always like you to kind of know who do you go talk to, okay? Questions on that? Let's do the same thing for direct labor, okay? Okay, so now let's do direct labor. Okay, we call those variances the, not the price, but the rate, right? And we call it not the quantity, but the, what is it?
Efficiency.
Efficiency. I'll abbreviate a little bit there. Okay, put in layman's term, if we have an unfavorable rate variance, what is that stating? If we have an unfavorable rate variance,
People are being paid too much.
what that says is we are paying our workers more than what our standards say we should be paying them per hour. Does that make sense? So what would be the title if you had an unfavorable rate variance? What would be the title of the person that you would want to get talked to first? Where would you start?
Your general manager?
Well, whoever sets the pay rates, right? So it might be human resource,
Maybe accounting.
but it could be some other supervisor if they're the ones who establish the pay rates. But maybe human resources, right? Okay. All right. What does an unfavorable efficiency variance in regards to direct labor? Translate that for me. What does that mean?
It's taking longer to make products than you expected.
Yes, very good, Matt. It's taking longer to produce the amount of output than what the standards say it should be taking. Okay? Now, if that is the case, who do you think you would talk to first?
Production manager.
Once again, it would be these folks down here as well. The production manager or the factory supervisor. And you'd want to say, hey, why is it taking longer? You with me? Does that make sense? But these are different people, right? Do you see why this whole variance analysis using standard costs, why this helps us with management by exception? Okay? All right? Because these are totally different areas of your company, and these happen at different times in the whole operating process, right? You purchase materials long before you use them oftentimes. You set people's pay rates long before they actually start working in the production facility or the factory, right? Okay? So again, another use of doing this variance analysis is because these situations will occur at different times in the operating process. Cool? With me? Okay, let's talk some more about interpretation and some things that you have to be careful for or careful in regards to. Let me try to look at an example. Let's take a look. I'm going to actually look at let's look at a past problem that we've actually figured out and kind of analyze it. All right, let's take a look at that XYZ again. Okay. Wasn't this was for direct labor, is that correct? This was XYZ, and this is for direct labor. Okay, now, let's say you have this sort of a situation that's shown, okay? Let's say that you have this sort of a situation, okay? We have a 460 favorable rate variance, and we have a 2400 unfavorable efficiency variance, okay? So, let's kind of concoct a situation here. You can come off of that, okay? All right, we have a favorable rate variance for direct labor. So I go to my human resource person, Ling Fei, and I say, great job. We have a favorable rate variance in regards to direct labor. Great job in human resources. I'm going to give you a $250 bonus for the quarter. You're doing awesome. And then I take a look and I say, okay, well, we have an unfavorable efficiency variance. So I go over to Daniel and I say, what's going on, man? You're the factory supervisor. What is going on? You're horribly, horribly inefficient. Okay? And I slap him around a little bit, right? Okay? Not really. But I certainly don't give you a bonus, right? I give you a good talking to, okay? Now, I want you to understand the situation here. Could these situations be linked at all? How, Matt?
So what if HR is hiring unqualified people to do the work?
Very, very good. What Daniel could say is exactly what Matt expressed. He could be thinking, and maybe even express verbally, hey, do you want to know why we are so inefficient in the factory? It's because human resources is trying to find the absolute cheapest labor that they can, and the folks that I have to work with every day, they're not skilled, they're not qualified, and to be honest, they're not very bright. Okay? Does that ever happen? Has anybody ever worked at a company that paid such low wages that the only people that worked there were just not the brightest bulbs? Anybody?
I mean, if we worked for them, we'd be not a bright bulb.
Well, yeah, your present company excluded, okay? I see lots of hands out there in YouTube land, okay? We've all probably been part of a company where the pay was so bad that the only people that stayed there were people who had to because they couldn't find better jobs because they weren't real skilled or they weren't real efficient or they weren't very qualified or they just were strange people, right? Henry, you've worked at one of these companies? Yeah. Can you expound on that?
There's a lot of cashiers.
Okay. Okay, and where do you work?
It was Walmart.
Oh, is it Walmart? Okay, well, I certainly don't want to offend Walmart. But there are companies that they pay so low, and they're always confused. Why are employees not very good? Okay, let me tell you a real life situation, because this is very important. Okay, because you guys are going to be doing hiring. You guys will be doing hiring someday. For 10 years, a job that I had is I was a recruiter or a headhunter. You know what that is? That's somebody who companies hire to help find them an employee. Okay? So the following situation occurred many times. Let's say that they retained my services to help them find, I'm just going to make it up, an accounts receivable clerk. Okay? Dave Krug, you come help us find an accounts receivable clerk. So I would sit down and I would take all the job specs from them. And then I would say, okay, what sort of skills do you want? What sort of programs should they know how to use on the computer? What sort of education do you want? Okay. And then this whole time I'm thinking, okay, I know the market. That's what I'm paid to do. I've been doing this for years. And I think, okay, the going rate for a person of this skill set that my client's describing, the going rate is $15 an hour. That's the average rate. Some people pay more, Some people pay less, but the average rate is about 15 bucks an hour. Are you with me? Okay. So then I ask my client, how much do you want to pay for this position? Now I know that the going rate for an accounts receivable clerk is $15 an hour. And they tell me, well, we'll pay $13 an hour. And if they do really good, after a year, we'll maybe bump them up to $13.50 an hour. Okay, well then I would try to nicely explain that the rate for this sort of a person is 15 bucks, and you want to pay $13 an hour. Now, why would anybody who's really good, because you want to hire somebody good, right? Oh yeah, we want to hire somebody really good. Why would somebody come work for you than less what they know that their rate is out there in the market? And then what sort of answers do you think I would get? Well, they would try to describe a lot of intangible things. Well, you know, here at ABC Widget Company, we don't want people who are just concerned about money. And the person who usually said that would be the person who's most concerned about money in the whole world, okay? But they would say, we've got a mission statement on our website, and we have a company picnic every summer, and it's like, nobody cares, right? And I say, can you bump that up a lot? And they go, no. So I say, okay, I'll see what I can find. And then I would present them a slate of candidates that would work for $13 an hour. And then they come out at the end of the day and they go, we're not real impressed with that slate of candidates. And I said, well, there's a reason, right? Okay. The thing that I just never understood was, let's say, don't pay $13 an hour. Don't even pay $15 an hour. What if you pay $16 an hour? Now, keep in mind, after a year or two, if the person's not very good, you can get rid of them, right? But think about if you pay $16 an hour, okay? What's the difference between 13 and 16? It's 3, right? Well, you take that times about 2,000 hours a year, and that's an extra $6,000 for that person, okay? That's about your, when you go to Vegas next week, that's about how much you'll lose on blackjack, Mr. CFO or Mrs. CFO, right? And let me tell you, you will be so much happier with that employee. There will be less mistakes made. There will be better collection efforts. Okay? You'll get your money quicker. There will be less of a headache. They will, they might even get their work done quicker and they don't even work as many hours, right? But so many times they said no. And I know that there's other variables in place, but, many times, because we can't pay that because that's what we pay all of our unhappy workers, right? The thing that I've always wondered is, can you quantify how much it costs to have unhappy, miserable workers who are underpaid? Do you know what I'm saying? Has anybody ever been in a situation like this? Somebody expound. Somebody give me an example. Nick, you have?
Yeah, I mean, at Kohl's where I work, everybody's just getting minimum wage, and then when raises come around, everybody gets pretty much nothing and are not feeling like working much.
Yeah.
Or very hard.
They don't feel like working much because they're so underpaid. Think about these sort of things as you guys move into managerial roles. All right? Because look at this. This goes to why we were figuring, somebody asked, why are we doing the total variance? Yeah, you're saving $460 maybe on your rate variance for that period, but you have an unfavorable efficiency variance. Your net disadvantage is 1940, isn't it? Don't do that, right? Now, I'm not saying that if you always pay more, you'll always have a favorable variance, but there are times that you will have that, okay? Like, for example, take a look at October for exercise 23.5. Maybe the fact that we have an unfavorable variance here means that they are really efficient. And we have a net favorable variance. This was October for exercise 23.5. Now, I know I'm concocting the situation. I don't know. Okay? I will tell you from my experience, I would rather have 4 really good employees and pay them a little more than 5 employees that weren't that great. Has anybody been in that situation where they've supervised people? Anything like that? Okay? Wouldn't you? Yeah. No doubt. They'll get their work done quicker, there'll be less rework, all that sort of thing. Okay. Can this happen in regards to materials? This whole situation? It can? I would agree. Talk me through it.
When I worked for Covan, they had these really crappy dollies, and they had a couple of these really nice ones that could just hold anything. And it was a race every morning to get the good dollies.
It was
'Cause
okay.
You'd rather have one that could carry everything than 3 that at any given moment the tire could snap off.
Very good. Now, that's a very good example. Now, the dolly, what he's talking about is everybody raced for the good dolly so they could do their job more quickly. Now, the dolly's technically not a raw material, but it still applies here because it's something that you work with. Like, has anybody ever worked on such a slow computer at work and you thought, oh my goodness, if they could give me a newer computer, I could get done so much quicker, right? Has anybody ever worked in a job with really, really bad tools? Anybody? Matt, where?
So I work for a software testing firm right now, and the old UI that we were using was just terrible and
Yeah.
buggy, and it was so slow, and it took them forever to fix it.
Yeah, it's crazy, isn't it? So what you could have is you could have a situation where you had a favorable price variance and a drastically unfavorable quantity variance in regards to direct materials. Now again, I'm concocting the situation. That's not always the case. But you could have somebody where, again, I go to my factory supervisor and I say, what is it with you? You have a horrible, unfavorable direct materials quantity variance. Why can't you be more like Henry, my purchasing guy? He had a favorable price variance. When you said, well, I tell you why. Henry over here is trying to save money by buying all these cheap raw materials, and it's very inefficient. The lumber we buy is all knotty. Or it has cracks. I have to throw a bunch of it out. I have to do rework. You know, things are breaking. It gets stuck in the machine, whatever. Because this guy's trying to save money, right? I can remember once, have I ever told you that when I was in high school I worked at Pizza Hut? Have I ever told you that? Okay. Thank God for Pizza Hut and the examples that it's provided. Anyway, I remember once, and some of you worked pizza. Pepperoni pizza is probably the most common pizza you make. You get a large pepperoni. Well, you know, after you'd worked there for a while, you could take some pepperonis, and it was like you were like dealing cards at Caesar's Palace, baby. You could flip those babies on that pizza, right? Well, I can remember one time they tried to buy a new type of pepperoni, the Pizza Hut purchasing people, because no doubt it was cheaper. And it came in this big glob. They weren't thick and they weren't frozen. They were all stuck together. Have you ever had that?
Yeah, we had to cut ours.
Yeah, and it slowed down the entire process. The pizza looked worse, and it was like when you had a pepperoni pizza, it was like, oh, you'd take the big glob of pepperoni and you'd like try to peel them off, right? And it affected the whole process. Okay. Now, let me ask you another question. We've talked about direct material and direct labor and how those can affect each other on the same level. Can the direct material ever affect the direct labor, or the direct labor ever affect the direct material? Yes. How?
Have unskilled labor, and they keep breaking the materials.
Yeah, you have unskilled labor, and they keep breaking the raw materials or ruining it, right? Or getting their arms stuck in the machines or something, right? Don't always try to buy the cheap material. Don't always try to hire the inexpensive workers. You guys have been in this situation, right? And you will be, okay? You'll hire people, you'll buy materials. Well, hey, let's wrap things up. I got some last minute announcements here, but any questions on direct material, direct labor variances, and interpretation of those? I usually have some interpretation questions on the exam. Now, let me remind you of some things. First of all, before I forget, I do not have a Chapter 23 Connect assignment. Okay? You guys are busy enough, and I don't really like the way the books Connect problems are worded. So I do not have a Chapter 23 Connect assignment. Okay? Now remember, you need to take the final. You must take the final. The final cannot be one of the ones that you drop. Okay? Everybody has to take the final, and it counts towards your grade. Okay? You folks at home. Okay? Now, I'm not, finals week is very busy for me as it is for you. I am not going to go chase you down if you don't take the final. You folks at home, my online students, you know the deadline. Look at the calendar. Look at the emails I've sent you in regards to when the final is due. At that point, I grade things and I put them in, but I don't go, man, Billy never showed up for his final. Let me call Billy and email him and try to figure out what happened. I'm not going to chase people down. I'm not going to hold their hands. It's just too busy during finals week, okay? So be responsible for yourself as far as coming in to take that final. If you have to take it early or something like that, talk to me or email me and we'll work it out. There's a lot of information on this final, isn't there? Okay? You know, this is the last part of your second accounting class. Things are getting a little bit more difficult. There's a lot of number crunching on this final, okay? So I want you to, and it probably takes a little longer than your normal test, okay? You have a little under a couple hours for it, okay? So be aware of that. I want you to do well. And we talked about this last time when we went over the study guide, right? Don't wait till the night before, okay? What's the best way to know if you're ready for the test?
Homework.
Can you do the homework, okay? Can you redo the homework? Okay, I hope this was a good class for you all. For you folks that are here face to face, I really appreciate the fact that you allow this to be taped, and this really does help a lot of people. For my online students, I would, you know, my goal with these taped classes is to have it be different than regular online classes. A lot of online classes have people taken online classes before that were where you just read the book or a narrated PowerPoint. I wanted to try to construct a class that really felt like you were in the classroom, okay? And I know it's a little bit more, takes more time and you have to come to the test center and all those sort of things, but I wanted to try to emulate that sort of environment. I'd love to hear from you online folks that are taking this, what your thoughts were, maybe if there's suggestions that I should, that you can give me of things I should do differently, okay? But I hope this was a positive experience for you. For you folks who are watching it on YouTube that are not enrolled in my class, I certainly love it when you send me an email. If you've watched all 41 of these lectures, be certain to send me an email. And if you've watched all 39 of my accounting 1 and all 41 of my accounting 2, what's total that? 80? If you've watched 80 videos of me, God bless you, right? Send me an email, though. I love to hear from you folks all around the world. I got an email from somebody in Afghanistan today. I love to hear where these people are from, and they tell me a little bit about themselves and how it's helped them. Tell me where you're from, and don't just tell, you know, be specific. What city do you live in? Don't just say I'm from Africa. Africa's it's a big continent, okay? But I have a map in my office where I put a thumbtack where people contact me. I like to keep track of where people watch these videos. A common question that I get is my managerial accounting class taped? And as of now, it's not, but who knows? Maybe in the future. There's no plans to do that now. I showed you the Facebook page to go to and like if you want to hear about new videos that are made. And lastly, you know, I love to hear from you online folks, you YouTube folks. I wish I could go and visit all of you, okay? And I've actually done that before. I went to Germany once, and my wife and I stayed with a student. It was, some people might think that was odd, but we stayed with their family. My wife and I stayed with their family for 3 days. They hosted us. It was great. We're still friends with them. So if I had all the money in the world, I would fly around and visit a lot of these students. If you're, maybe your father is a prince and you have lots of money, maybe you could pay for my airline tickets, okay? But no, I do like to hear from you folks. So send me an email. And is there any last minute questions, comments? Does anybody want to give me a hug? Anything like that? Okay. You guys have been a great class. I really appreciate that. Good luck on your final. And if there's no questions, we will sign off. All right? See you guys. Bye-bye.